Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we are seeing mixed markets around the world this morning after the UK's worse than expected unemployment rate. Europe is down a second day, but is somewhat controlled. Asia, we have mixed. The Nikkei is giving back some of yesterday's gains, with the Shanghai being the standout, up about 1.1% at 2-month highs. In terms of our markets, our futures are down about 5 to 6 handles. But after the move that we've seen over the past 2 weeks, Scott, would you say it's pretty healthy?
I think that nothing is so unorthodox or out of whack. You know, what you just said about the world markets being mixed, that's the kind of environment we've been in since we started 2014. Europe, which was stronger going in, just had a big move like we did. So with it being down, perhaps 2 days, but in a very controlled fashion, no big deal, even when their unemployment rate was higher than expected. And then, Brittany, you mentioned Japan. You know, Japan that got hit harder than the other world indices, bounced back 3.1% 2 sessions ago and only gave back 0.5%. So it's not like it gave it all back.
Right.
And then you have, you know, Shanghai, which actually put a low in, is acting better. It's at 2-month highs. So again, mixed. And then our markets are down 5-6 handles, and that is after we just saw a very, very feisty move from that red dog reversal at 1740. So if you look here at the charts of the S&P instead of a black screen, you know, there it is. You'll see that we had a nice little red dog reversal right around 1740, and that was after about a 6% elevator move down. But then what happened? The bulls said, you know what, the bears took the elevator, we're going to just come back up on the bungee cord. And that bungee cord was even faster. So with that being said, makes it a little bit complicated. So here is the move. Here's that red dog reversal. Here's your penetration, digestion, follow through, and then here we are right next to the old highs. Whenever you get back to old highs, sometimes you bring out sellers. It's not always easy to just blast right through. So having it come off a little bit would not be the end of the world. You know, if you have a lot of longs and you're on a hedge, maybe today's a little bit more complicated, but perhaps things do go green. Support, micro support, 1835. You know, I think we're a little bit below it. See if we reclaim that quickly or we get more weakness. If we get more weakness, this 1825 is a bigger level, and then all the moving averages start to come in for support here, and that will be your very important intermediate spot if we see it, but I don't think we see that today. I have a hunch that we hold somewhere around here.
Well, a lot of eyes could be on the solar group today after solar stocks helped lead yesterday, with Solar City being the standout, 8% gains yesterday. So will you be looking there for some continuation today?
I would like it, considering I still have some long.
There you go.
Obviously, you know, stock closes on the highs. The good book says take some out, but it was downgraded to a neutral. But I've seen it absorb that in the past. It may take a day or two, maybe not. Maybe it just goes through. You look at the stock. The stock's had an unbelievable move. The chart's been very, very strong. You know, we've been talking about this for so long, and here we are at highs. It would be a little unfortunate if all of a sudden it just gave it back and the downgrade, you know, put a little bit of a kibosh on it, but I don't think that's the case. I think today, hopefully it tries to go green. If it can go green, you know, I still think you could see a move, but you know, through 80, and that would be all-time highs. You know, you go to your quick little 5-minute chart. All right, I would say where it is right now, this could be a small opportunity somewhere around 77.5. If it could hold 77.5. Very strong. It might have to test the 76.32, but if it doesn't hold there, then I do think that I'll probably be out of it and I'll revisit.
How about CSIQ? This could be one to look at today as well. That gained more than 4% yesterday and closed on highs as well.
Yeah, this one's not in the news. So if the solars want to stay strong, sometimes they go after one that just doesn't have an upgrade or a downgrade. And you look at this chart, this is, you know, in the Canadian area, and it's not leading, but it's poking its head above. And this, to me, looks like if it could go green and go above, you know, just say 40, perhaps it gets on its way.
Or for solar, perhaps 7% gain yesterday.
Yes, and this descending channel, I like descending channels because when they change the trend, if you get in early, you could kind of stay with it a little bit longer. And if you look at FSLR, you have this descending channel, and we talked about this with Bob yesterday, and these lines were potential strike prices to have some kind of, you know, straight calls or whatnot. Yesterday, very strong day, so if it's off a little bit today, maybe this can go green. And one other one that we don't have listed, I just want to show, is SPWR. This stock has been very strong. It's had a really big move, but it does have a big channel. It's holding in there. You know, if this one could see a move above yesterday's high, which is 34, just say 50-ish, then this long-term resistance, could get taken out for new highs here if the solars decide to make new highs. And so far, they've been pretty strong.
Well, also on the radar, social media stocks. We're going to go in the trenches with that group right after this quick commercial break.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with social media stocks, which continue to be on the radar. Facebook managed to close off its lows yesterday and had been hovering at highs. What do you think about Facebook here?
Probably the first thing people should look at today with a little bit of a down open. Perhaps it goes green and trades above the recent area. You look at Facebook, a lot to learn from this stock. Went over at the Trader Expo about how a big pro gap means power. Then once you have a gap here that gets filled, it means corrective phase, and then you had your red dog reversal. Now let's look at where we are as we've been following the 8-day and as we held the last gap right here. So with that being said, you take a closer look. Yesterday they hit it at first and then it regrouped. So this is a candidate today to go from red to green, and if it could take out 67, what is that actually, 67, like 58, you could see another move. So far so good. This one's been very strong.
And how about Twitter adding another about 1.5% to its recent rally yesterday, just shaking off those shares being unlocked?
Yeah, it's not scared.
Right.
Maybe today if the shares do come in, because once they come unlocked doesn't mean everyone sells. Most of them are guys from the company. They're involved long term, and there's like a culture. Oh, did you sell your stock? And it's almost like you're not supposed to. They do it. Oh, let me do it on the side. So sometimes there's not as much selling pressure as the street puts out there.
Right.
So with that being said, you look at the chart here, it's been a nice vehicle. Ever since it missed earnings, if you didn't take it, we talked about this potentially being support, which was the prior high that held. Then you had this nice tight move to trade above 54.92 to get in the gap. And then since then, it's been slow and steady in the gap. And now today, it's probably flat to downish. And if it starts to go green and no selling pressure comes in, there's a pretty big high short interest above 58.84. And this is actually 58.98. Perhaps it squeezes more into the gap and you can get another nice calculated tactical trade here.
How about LinkedIn? LinkedIn actually managed to have a small bounce yesterday, about 3%. What do you do with LinkedIn today?
Guys on the VTF were talking about the potential of a red dog reversal, and I missed it yesterday. But it's funny, the Twitter sphere is really learning the strategy.
Yeah.
And they're like pointing it out to me. I'm like, well, I'm doing other things. Like, come on, it's a red dog reversal. I'm like, so you learned the strategy, you learned how to fish, reel it in yourself. You don't need me to help you, with your line. So with that being said, LinkedIn yesterday, after a corrective phase from 260, has come all the way down. It broke the last, just say, line of support here, which was about 198. And then yesterday had a small red dog reversal. It doesn't mean it's changed. It doesn't mean it's all of a sudden bottomed. But what it means is you had a nice calculated trade when it traded back above this 185.73 and almost engulfed that day. So today, maybe they come back for it. So if it's down a little bit with the futures, a trade above yesterday's high of 192 could get you some more upside, and then maybe retest this broken support that could turn into resistance around 198. So far, I just think it's a good trade. I don't know how much more it's going to amount to.
Yelp on the radar as well, building a tight base above its 8-day EMA. What do you think about this setup?
Yeah, I'm involved actually with Yelp. I'm hoping that it trades above this flag. The stock's been strong, and if you look here at it, you will see they had a nice earnings report with a good gap and go. Then all of a sudden they had the news with Yahoo, and they sold that, meaning it needs more time. And now look at this tight area. So with that being said, you've had red. Unfortunately, you've had green, red. It's been like that game we used to play, red, like 1, 2, 3. So with that being said, I'd love for it to show some relative strength today. And if it were to get above 92 to 92.5, I think I'll add to it, and then perhaps it gets some momentum back. If it were to break below this area, unfortunately, I'll probably be stopped out at the 8-day.
And how about Zynga? Nice follow through yesterday, logging about 5.7% gain. This has been listed and off the charts with a target of 550. What do you think of the setup here?
I'm involved, and I think I've been long in my disclosures for almost 2 weeks or something like that. So with that being said, you look at the short-term chart, the stock changed once you had this big gap up, and this is why I like gap ups, because if they don't get filled, they show you some power. And from there, it's been riding the 8-day up. Yesterday, maybe with the Candy Crush news, it got a little extra power. Talked about this stock a few times last year too. You look at the monthly pattern, and this is all where Zynga is. Zynga is just coming out of this, long-term 2-year channel. Maybe you can even see it more clearly on the weekly. Look how long it's been going sideways under accumulation. So now it's poking its head up. I do think at some point this stock does see somewhere around 6, and if it really gets very, very frisky, perhaps it could see up to 8. And I've heard some people talk about that this thing could see up to there. All they got to do is come out with another rock star game and continue to make some headway with the new CEO and the new construction.
Yeah, exactly. All right, well, let's do some quick hits here and talk Apple, which was coming into resistance and stalled there. Is this one to buy in a pullback?
I think so. I think the stock gave us a nice trade into the gap around 517. It hit the wall of resistance yesterday that we discussed. That's why yesterday I really didn't trade it. I was a little upset when it was up a lot, but I'm like, you know what? I'm going to stay away. This was the calculated area around 517. Here could have been your ad at 523, and then nice move up into big resistance. What did it do? It had a topping tail into it. So that tells me a little bit of a rest. And why not? Look at the move it just had. So with that being said, I'd love to see it pull back to the 537 area. I would write down a few different supports. This would be high-level support 542. This would be a more support number, more intermediate. And then I think this would be the line in the sand. Anything below this, and all of a sudden, I think anyone trying to buy that dip will get a little frustrated.
What about over in the financials? The banks have been somewhat out of play. What do you think about your favorite bank, Bank of America?
On an active basis, I did sell it yesterday. If you're a long-term investor and you're not going to get back in and try and be cute, I would not really touch it. But for me, if I show you the chart, I was a seller of mine when it broke this area because I was playing for it to be in tier 1 here and then a tier 2 if it broke above it. What happened? It broke below it, still showing relative strength. It's still above the 50-day. All the other ones are down there. But for me, I'm going to get out of the way and I'll figure out if maybe we get a red dog reversal today through 1647, I'll get back. But overall, it's been a heck of a move. I still think this is not the high of 2014, but for now, it's been showing a little relative weakness, so I followed my rules and I got stopped out.
How about Glue Mobile? This isn't one that we have talked about traditionally on Morning Call, but this put in a new high yesterday, had a nice breakout, and closed on high, so maybe this is one to watch today.
Yes, and as the market starts to broaden, actually it's very thin, but it also has a broad base of new stocks coming up. You'll see some of these. Usually Sperling has most of them in his VTF, but I do play along. And if you look at this one, guys in the virtual trade floor have been talking about it for a while. And now, just like any other stock, you have a big gap right here. So that shows you power, digestion, and then it traded above it. So, some guys went with it, so did I. And perhaps let's go to the monthly chart to see where it can go. It has some resistance right around here, but this looks like it's on its way back to 6 and maybe higher as well.
Lots of individual stock action out there. How about Green Mountain Coffee, which is consolidating above its 8-day, perhaps getting ready for a breakout?
This also, looking for another setup because that's what we do. Take a look here. I'll just get right into it. You don't want to hear me blabber, even though I could use some Green Mountain Coffee. This was the news with Coke. This was your consolidation. Here was your push. Now it's flagging again. Nice green day yesterday. If it can get above 121-ish, 121.50, it perhaps can go again. So this is a nice bull flag continuation setup. I will look at that today.
And Chinese stocks have been in play recently. Qihu, nice breakout yesterday. What do you think about this one?
This one was trying to have a clean breakout for so long, and finally it did. Let's hope today it continues. If you look at my disclosures, I am in some Qihu. Lots of times it's tried to go and failed. This time it went cleanly above. I'm hoping today, it opens up flat, market gets a little stronger, and it trades through 106.93 for continuation. This has been a very strong stock. It's very highly rated in the IBD, and it's following the 8-day, 21-day relative strength above, so it's playing by all the rules that potentially you could see higher prices.
I'm throwing in another one of those names. How about Ren, which gained 11% yesterday?
Well, this is one of the little guys.
Right.
There are a lot of little guys popping up in this type of market, maybe have some kind of volume sifter or some kind of You know, we use it sometimes too, where you see stocks making new highs, it comes on your radar, trading extra volume. And I remember Ren and Dang and some of these. So this one yesterday popped up on my radar. Okay, it's obviously come from a lot higher. Big wide range bar, day one. So I'm hoping maybe day two or day three. You want to put some volume in here. You go basic studies just to see if there's volume attached. And there was. Look at this volume there. Nice volume, decent move. Tells me someone thinks something's going on there. So I got involved and I'll try and stick with it.
All right, so we do have the Fed minutes coming up today at 2 o'clock. Will this be big on your radar today?
Yeah, well, we'll see how we're trading up to there. We're having a soft open, so we'll see if we go positive. If not, if we're down all day, maybe the Fed minutes turn around the market. I don't think they're going to be anything different than we heard from when Janet Yellen spoke for 6 hours in front of Congress talking about continuity. So with that being said, perhaps that's something that could be a catalyst later today, for us to maybe get a little bit of strength back, or that could be something that, breaks us a little bit lower. So as of now, that's at 2 o'clock. Let's see how things react in the first hour and a half. And then again, just remember your time frame. We've come up 90 handles or so. So if we have a down day or two, not the end of the world, and then we'll measure to see where we hold, to see how fast perhaps we try and get back to those highs. But stick to the individual names. That's where the action's been.
And with that said, happy trading. Have a great day.